Welcome in, folks. I hope everybody's having a tremendous day out there as always. Big day for the public count here today, up $46,000 here today. I have some massive positions reporting earnings in the next 24 hours. Meta, Tesla. I want to speak about at the top of this video why I don't really care so much about where these stock prices go short term. I think it's important so you understand kind of the longer term opportunity with Meta and Tesla. So I want to talk about that at the top of this video. Then we're going to do some reactions here. I want to react to this video from Tom Lee. Tom Lee says yesterday was a massive buying opportunity. I want to go ahead and react to that, kind of share my opinions and perspectives about what Tom Lee's talking about there. Mark Cuban, on the other hand, says he's in cash and wasn't buying the dip yesterday. So I'm looking really forward to reacting to that and why Mark Cuban was not buying. And then the last one we'll react to here is Gene Munster. DeepSeek's innovation is real, but AI spending is still on track. So looking forward to hearing his perspectives on the whole tech space. He covers the tech space very well. So looking forward to hearing his thoughts and opinions on that. Appreciate y'all joining me as always. All I need from you guys, one thing only. Do it. Takes 1 second out of your day. Just go down there and hit that like button on this video here today, please. And then if you want to subscribe to the channel, you can certainly subscribe. We are approaching 75,000 subscribers here on the Reaction channel now at this point in time. So appreciate y'all for being here. Additionally, if you're looking for access to all of my best course curriculums, my entire library teaching you exactly how to be a top investor, as well as my private Discord chat, exclusive weekly videos from me, all that good stuff, pin comment down there. You can click on that, fill out a form. We'll see if we can get you access to my private stock group and private wealth group, maybe a little later on this week or maybe next week, okay? Alrighty, guys. So let's go ahead and talk about Meta and Tesla here, right? So Meta, Tesla, major positions for me. Why don't I care? Let's say these stocks go down 20% on earnings, which might not happen, but let's just say hypothetically that happens. Why don't I care, right? Here's the deal. Tesla is a super volatile stock. Like I just showed you here over the past 5 years, these were all insane volatile moves. It's not like these were small moves. These were all monumental moves for Tesla just in the past 5 years. Like Tesla's just a volatile stock. So if Tesla's up 20% tomorrow, down 20%, up 5%, down 5%, it really doesn't matter at all to me. Like that's just what I come to expect being a Tesla shareholder, right? Tesla stock could have a drawdown all the way to here, and I wouldn't be surprised. It could skyrocket higher. I wouldn't be surprised. Like nothing surprised me with Tesla stock. Once you've been an investor of that company year after year for many years, you come to just expect wildness from that stock. That's just what it is, right? Meta, massive position for me. Why am I not even scared? I have 0% anxiety or fear about, what's going to happen with Meta earnings here? What's the stock price going to do? And here's why. The reason being is this stock is on its way to $1,000 in the next 24 months, regardless of whatever happens tomorrow. And the reason being, I love to run projections on my companies, right? This is a realistic projection I have for Meta stock over the next number of years. I have them averaging 17% revenue growth from 2025 to 2028. That's a pretty realistic assumption in my personal opinion. Obviously, the company's been growing 20% plus. I think their growth rate will go down a little bit, but not that substantially because the business model is so stable. So 17% revenue growth on average per year, right? Net income growth of 20%. I believe they are going to keep costs down immensely over the coming years. So then do net income growth of about 20% per year on average from 2025 to 2028. You could say 28 to a 35 PE would be very fair for Meta, given those sorts of growth rates. So that puts the stock in 2026 somewhere between about $919 and about $1,149. So the moral of the story is in 2026, Meta will likely be $1,000 plus per share. I'd say a pretty high probability of that. Then we can say 2028, the stock's somewhere between $1,300 and $1,600, and that puts Meta on a path to be $2,000 or more by 2030 or before. So I am of the understanding that Meta stock is likely going to be $2,000 plus in the next, we can call it 4 to 5 years. So if Meta goes down to 500 tomorrow, I don't care because it's on its way to 2,000. If Meta goes up to 700 tomorrow, I don't care because it's on its way to 2,000. So it's all irrelevant to me, right? And we could say this stock's likely on its way to $1,000 in the next 24 months. So once again, if Meta goes down to 500 or goes up to 700 tomorrow, it doesn't matter. It's on its way to 1,000 plus over the next 24 months, right? We can say even if we take a much more conservative approach, which I would call this a little more, on the bearish side than kind of what I'm expecting, 14% revenue growth on average for the next number of years, 17% net income growth, you could say the stock's still going to be probably around $1,000 in 2026, right? And it still would be on the path to $2,000 probably in 2030, right? And then we can say we could take a pretty bearish stance here. 11% revenue growth would be bad for Meta over the next number of years. I mean, really bad. So if we did the company at 11% revenue growth and 14% net income growth, guess what? The stock would still approach $1,000 a share in 2026. I don't know if it would get there, but it would approach that level. And that's in a bearish scenario. So this is why I have 0% anxiety, worry, stress about what's going to happen tomorrow with Tesla, what's going to happen with Meta. It's irrelevant, man. It's completely irrelevant. Like, it's just going to be fun and entertaining to see it and go over the numbers, and I'll do that for you guys on the main channel tomorrow night, right? We're going to have a whole party and a whole great video on the main channel tomorrow night. We'll go in depth on the Meta numbers and the Tesla numbers, and we're going to look at everything. We're going to talk about it all, right? It's going to be a lot of fun. But in terms of am I nervous? Am I worried? It's irrelevant, man. Because I am understanding of both those situations. Tesla's, just up and down. It's just what it is, right? And there's a whole lot more ups and downs when you're a Tesla shareholder. And then Meta's it's on its way to 1,000 and then 2,000 anyway. So it's whatever. They want to send it down tomorrow, send it down. They want to buy it up, buy it up. Like, it doesn't matter. Whatever happens there because of their numbers, the way their numbers are trending, like $1,000 to $2,000 a share is coming out here very, very soon in regards to that one, right? Alrighty, let's go ahead and pull some reactions here. Start off with Tom Lee.
Especially on this day. What do you make of this?
Well, markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction. I mean, NVIDIA decline is the worst since March 2020. And we know that ended up being a huge opportunity for investors. So I think it's not a fun day, but I'd be looking at this as an opportunity.
Do I believe the move yesterday was an overreaction? My personal stance is absolutely I believe it was an overreaction. Like 17%, like I could understand NVIDIA getting hit yesterday, right? On the whole comments, and once again, I think it's hard to believe they built that on $6 million. But let's say they did hypothetically, right? And Brad Gerstner actually did a great breakdown on Fast Money tonight on kind of his thoughts on it. You know what? I have Fubo on here. Let me see if I can pull up this Brad Gerstner clip, because I think that's going to give people a lot more of an interesting viewpoint on this from what many would consider an expert on the industry. Alrighty, guys, I found you the clip here on Fast Money, okay? Brad Gerstner. This is a good little clip here I want to react to. I think you guys will get a lot of value out of this.
More GPUs. So, again, what happened yesterday? It wasn't a breakthrough on the model. They actually built a model that's kind of where OpenAI was 10 to 12 months ago, the O1 or the O1 preview model. But there was this idea that they did it for a fraction of the cost. And I heard reported all over CNBC yesterday that it was $6 million versus billions of dollars to train O1 or O1 preview. I would say my informed speculation is that the cost of training O1 or O1 preview was less than $20 million. This was not a big price breakthrough. It's actually what you would expect. The cost of compute comes down by about 50% a year. So if it cost OpenAI a year ago to build this model $15 million, you would expect it to cost $7.5 million. And we know they also use distillation techniques. It's not to take anything away from DeepSeek. I think it's a great thing for the world that we're going to, make this cheaper for everybody. Everybody's going to have access as a consumer. All these enterprises are going to have access.
So that's an important thing to understand about this whole game here and this DeepSeek thing, right? Brad Gerstner is basically saying the model is much more similar to where OpenAI was, maybe a year ago or so, right? And people could debate on that because I have heard this DeepSeek product is pretty high level, but the question is it better than what OpenAI has in the market today? Then that's something that could be debated. But if that's true, then it's not nearly as impressive. If people think like what DeepSeek has today is better than what OpenAI has today, then we're talking about a whole different ball game, right? because obviously there's just been a lot of spend that's going into OpenAI. But if it's more competitive to what OpenAI was in the past, then we can say, okay, like this isn't as impressive as maybe it sounded initially, right? And so I think this is a phenomenal point Brad Gerstner is bringing up here.
Enterprises are going to have access. It's not just going to come out of places like DeepSeek. Llama is going to one-up them. I imagine there are going to be other companies like OpenAI and Google and others who are going to be open sourcing their lower tier models while, they still charge a premium for the frontier model.
Brad, I mean, your words are, people should listen when you talk, and I'm one of those people. And you mentioned price to earnings is not only reasonable, but given where we've been, it's extraordinarily cheap. But my concern is in terms of NVIDIA, they're sort of out-earning their revenue. In other words, the margins at 77% suggest that something's got to give at some point. That price to sales number is still, for me, a bit of a sticking point.
That's a great point. Guy Adami brings up here, and that's what I was actually talking about on the main channel last night. If you watched my video on the main channel last night, I was talking about NVIDIA. I was like, there's no valuation concern when it comes to PE or forward PE for NVIDIA. NVIDIA yesterday was trading at a forward PE in the high 20s, right? That's extremely fair for a company that has the growth rates of NVIDIA. Even if the growth rates slow massively, that's still a very fair PE. The issue was, as I spoke about last night, the price to sales ratio is very, very rich. And so if there's a more competitive environment for NVIDIA, margins could go down, which then could potentially start to hurt that PE, right? Because if you do look at the price to sales ratio of NVIDIA, it is definitely sky high. And it's like, is this really sustainable long term? I don't know. It's a big question. It's a fair question, right?
I think, as an investor, I'm always trying to disprove my conviction. And what is the thing that would cause me to change my mind on NVIDIA? It's not the fact that we're going to drive down the cost of intelligence, because I think Jevons paradox, the actual amount consumed goes up. What actually would change my view is if I thought there was an alternative competitor who could produce accelerated compute in the world, anywhere close to total cost of operation, what they can do. So there was a lot of fear about custom ASICs and TPUs and Inferentia and Graviton, coming out of Amazon. But what we see is the explosion in demand is so great that there are use cases for those custom chips, but still the number of GPUs ordered by all those hyperscalers are going up, including Google, who uses their own custom TPUs. So I don't think this is either or. I think it can still work for Broadcom, still work for places like Astera Labs who are in that complex. But, I'm just looking at the numbers. I don't see the level of competition at the frontier of compute today to NVIDIA.
So if this pulls forward adoption of AI, what else does it pull forward? Presumably it pulls forward peak spending, peak CapEx spending. Maybe it distributes the gains to software faster. I mean, what sort of changes in this new world?
The things that get us excited, a couple other themes. One is, people look, we wrote the letter to Meta in the fall of 22, and people wonder, how did Meta double, more than 2x their revenues while going from 87,000 employees to 65,000 employees? Because they were leveraging AI, right? Every market leader can leverage AI to grow top line faster, accelerate their top line while reducing bottom line. And they're doing it across their businesses. It's accelerating today. The other one in software, we have 25% of our book in software. Everybody last year, Bill and I did a pod when everybody declared software dead, right? And Satya came on our pod and said, maybe application software is a thin layer on top of a CRUD database. Again, got everybody scared about software. Software's trading below its 10-year average at 5.7 times forward revenues. At the peak in 21, it was at 18 times. So I think there's a lot of opportunity in the market today, and AI is going to accelerate it.
You mentioned Facebook levering AI, and it's manifested itself in the last two earnings release.
So obviously, good clip there. I hope that brought you guys a lot of value there, listening to what Brad Gerstner had to say in regards to that subject. I do think it's important.
I've been thinking about, the people who've been coming on today, of all sort of professions, whether it's a strategist or investor or whatever, analyst.
And that's what I always want to do here with the Reaction Channel. My goal is to always bring you guys, interesting insights, different points of view, right? And then kind of share my opinions based upon these other folks' opinion. That's one of the big goals with this Reaction Channel over time, and I hope I've done a good job of kind of conveying interesting, different thought process, bullish, bearish on these different subjects. And getting close to 75,000 subscribers now on the channel, I think it's kind of working. But anyways.
Defending all this or saying it's overblown, how do we know? What if it's not? And if it isn't, what does that mean?
We don't know if it's overblown. You're right. But this is the nature of technology. I'd be personally surprised if NVIDIA became Betamax in the past week. I mean, that's really would be the kind of change that would be required to really justify selling NVIDIA here. And given, I think, the need for AI because of global labor shortage and NVIDIA chip dominance is still strong, unless a new model emerges that doesn't require GPUs entirely, I'd say that markets just generally do buyer ready aim. I mean, I think it's hard to know, though.
I won't disagree with you on that. I mean, that's how the market tends to do that. But a lot of AI was sort of sold to investors on a hope and a dream, right? We haven't seen, in many cases, the ability yet to monetize all of this, or at least to have a sizable return on the investment that a lot of these hyperscalers are make tens of billions of dollars that they're pledging to spend. Doesn't that matter? I mean, what if some of that hope and dream just doesn't come to the degree that we thought?
Well, some of that hope and dream won't come for some companies. Some companies will overspend here, and it won't work out for them long term. Like that's part of business. Like that's part of every cycle. Same thing with the internet age. Same thing with every age. Like some companies get a good ROI on it. Some companies get a game-changing ROI on it, right? Some companies get a small ROI, and some companies get a very negative ROI on this. But it's always been like that. And that's just the way business works, and it will always be like that.
Decide that it wasn't worth the money that we were willing to pay for it.
I mean, these are fair questions. If NVIDIA was at 100 PE, I'd probably say that there's too much good news priced in, but the PE is around 30 times. I'm not sure that that's very demanding for investors, and if you look a couple years out, it's in the 20s. I don't think NVIDIA is priced for perfection.
Is the market itself?
I don't think so. I mean, the 10-year now is backing off to 4 or 5, so you're still paying over 20 times for a 10-year bond. The median PE in the S&P is around 18 times.
Yeah, but I mean, because it's skewed, though, because of the mega caps, we're still like 22-ish times. So, earnings have to be really good from here on out, right? Don't tell me about multiple expansion again driving this train. You got to put up or shut up when it comes to earnings this period.
That's right. But, I've been researching companies since the early 90s, so over 34 years. I never found a PE for a high-quality company to be at 22 times, let's say for Mag 7, to be a demanding multiple. Again, I think if you're talking about price for perfection, it really has to be stocks where you have to back into the NPV of 100% earnings growth forever.
What happens if, at bare minimum, we are questioning Nasdaq stocks for the foreseeable future? It just doesn't feel like, tomorrow everything's going to be great kind of deal. So as long as we're doing that, is there enough momentum behind some of these other areas of the market that this market as a whole can be okay?
Well, today, market breadth's actually pretty good.
Yeah, financials, healthcare, staples, they're green. Dow's up, almost 200.
That's right. Even in Nasdaq, we have stocks that are up.
Apple, Uber, Meta, yeah.
And I think that year to date, we have 3 weeks in, and year to date, Bitcoin's outperforming, small caps outperforming financials. So I think the market does look pretty healthy. I would say it's also very encouraging that if we can close on the S&P above 5881 by the end of this week, it really solidifies that 2025 is going to be probably a double-digit gain year.
What's your favorite part of the market right now, outside of tech?
I think financials, to me, represent a pretty good fundamental case of change this year because we have a new administration, a Fed that is dovish, yields that aren't painful for banks, and at a time when it could lead to upside for capital markets activity and multiples are low. So I think financials remain our number one S&P sector idea.
I mean, because I ask you because your narrative is so levered, so to speak, to big cap tech. Your top 5 ideas in the market are NVIDIA, Amazon, Meta, Google, and JP Morgan.
Yeah.
Are you not rethinking any of that?
No, at the moment, no. And even
I wouldn't rethink it. Are you kidding me? Like NVIDIA, obviously. Like, hold on. Let's hear the rest of Tom Lee, and then we'll run through that.
Just one day is painful. I do think markets tend to overreact. And again, unless we're on the cusp of a recession, this pullback in NVIDIA is going to prove to be a buying opportunity as well.
Any Fed risk this week at all? Can they? Do you have any worries about what they?
Okay, so let's talk about this. Let's be serious, okay? Tom Lee's top 5 picks here, top ideas. NVIDIA, Amazon, JP Morgan, Meta, Google. Here's what you need to understand about this. NVIDIA is so obvious, right? Massive chip demand. If they continue to have even decent chip demand, over the next few years, it's a little above where we're at now. This one's looking good. It's hard to really talk down NVIDIA unless you really truly think all these big tech companies are going to spend less in future years. Outside of that, it's hard to really talk that one down, right? Amazon. Easy peasy lemon squeezy. There's a reason that's one of my biggest investments. There's also a reason that I always say I believe I'm underweight Amazon. I wish I owned more shares. Easy, like AWS going to see massive demand over the coming years, especially from a lot of these AI applications. JP Morgan, the best of the best when it comes to banking space. It's the only banking related name I've ever owned outside of Goldman Sachs, and this is in 16 years of being in the market. There's only 3 financial names I've really ever owned that are kind of more banking companies, right? JP Morgan, Goldman Sachs, and SoFi. And that's it. And you can say in the fintech space, PayPal. So for me to ever own something, it's got to be pretty special in that space, and JP Morgan is, right? And obviously, JP Morgan and Goldman Sachs have been tremendous stocks over the last number of years. Meta, Google, both are great valuations, both are very compelling for different reasons, right? So Tom Lee's just got 5 easy stocks there. Those are 5 easy winner chicken dinners. It's hard for me to even see one of those doing bad over the next year or the next few years. Never mind all 5. Maybe one does bad. Who's it going to be? But I doubt. I wouldn't be surprised if all 5 do well. So I think he's right on in regards to that.
They're not going to do anything, we don't think, but they always say a lot.
Yeah, there's a lot of uncertainty going into January FOMC because last month it really caused markets to rethink the probability of a hike. But the probability of a hike for 2025 now stands at 27%. I think that's an extraordinarily high probability. I think there's a chance the Fed
FOMC meeting a positive catalyst for stocks. How do I feel about that? I don't know if I would say it's a positive. I kind of feel like it's an indifferent situation, in my opinion. I don't feel like it's a massive negative or positive catalyst. I think we're so focused on earnings right now that I think right now the Fed doesn't matter. The Fed will come back into picture, over the next few months. But I feel like right now everybody really wants to just hear these companies' earnings and guidance over this next week or two because you got all the big dogs reporting over the next couple of weeks here. Markets are too hawkish. That's debatable, but that's probably a little too hawkish now at this point in time. I don't think they should be super dovish right now, but maybe a little overly hawkish. Odds on a Fed hike in 2025 too high. I do agree with that. I think the Fed hiking in 25 extremely low probability. 2026 is completely fair game, but a hike in 25 with Trump in office. Come on, man.
more dovish than market expects.
Tom, we'll talk to you soon. It's good to see you as always, especially here at Post 9. It's Tom Lee, Fund Strat.
So here's the thing you got to understand about the stock market. It's important everybody understands this point I'm about to make here. The stock market, when there's panic and things like that in the market, and there's something that just shocks the market, the stock market takes the approach of shoot first, ask questions later. Shoot first, ask questions later. That's always been the stock market, the way the stock market has worked. It probably, honestly, at least in our lifetimes, will probably always be the way the stock market works. Maybe someday AI can take over and not act so irrational like humans do. But you got to understand, the stock market, although much of the trading in the stock market is done by machines and algorithms, you understand a lot of the big buy and sell decisions still come down to humans. You got to remember, there are humans in charge of massive quantities of money in the market. The hedge funds, right? The mutual funds, there's still humans that are running this money. You have to understand that, all the high net worth individuals. And if suddenly something comes out of nowhere and shocks everybody, people take the approach of, let's just sell. Let's just sell and then let the dust settle, and then we'll figure out what things are here. And that's exactly what you saw on a day like yesterday, right? And when you just get that relentless selling pressure, right? And then you get a lot of people that could be buyers on the market say, you know what? I don't know. Say, I don't know if I want to buy right now. What do you got then? But that's the way the market's always been, okay? So you're going to get these massive overreactions, and you're always going to see that. You saw that in the great financial crisis. You saw that in the Rona crash. You saw that at the end of 2018, right? Now, I'm just talking about the time periods that since I've been an investor, right, which I started investing during the great financial crisis. You saw that then. You saw that in 2018. I saw a bunch of like little mini corrections and crashes like throughout the other years, but like some of the most severe I remember is great financial crisis. 2018, end of 2018 was nasty. 2020 was nasty. 2022 was nasty, right? And so it's just a lot of times you get these overreactions, and you get a day like yesterday when all of a sudden, Nvidia's down 17%. Like, I understand Nvidia should have been down, right? Okay, we're worried, we're scared, what's going to happen? But 17% in a day? In a day? Come on. Like, all those stocks, it wasn't just Nvidia, it was so many stocks were down 10, 15, 20%. You saw even energy stocks, some of them down like 20+%. Like, it was dramatic, right? That's a market. Shoot first, ask questions later. Mark Cuban.
Really means, and what correlations, if any, there are back to 1999, which you know better than most, considering you sold your company in April of '99 for $6 billion and collared it, and became the Mark Cuban we all know now. How are you thinking about all this?
Impressive, sir.
So I think one of the fundamental issues with the market right now is no companies are going public. There isn't, back then, Amazon was a new company. Dell was relatively new. There were incumbents that we all looked at as being, the default powerhouses. But there were new companies coming public that we could look at and say, okay, maybe these guys have something unique. I mean, if it was today, Google probably would not be public. Amazon might not be public. You can go down the list, and there are companies right now that are up and coming in the AI space that are private. And because they're private, nobody gets to invest in them. Well, at least, typical investors don't. And you don't really get much conversation about them. And I think that impacts the conversations and the market movements that we saw yesterday and today.
Did you think it's going to change? Does this open the door to more startups because of what we witnessed from DeepSeek, the way we sort of think about these open source models, the way that, maybe the incumbents are suddenly put on the defensive, so to speak?
Yeah, it was interesting because you mentioned earlier about an arms race, the Meta, the Amazon, OpenAI, all just spending just billions of dollars. And that really reduced the competition because it sent the message that, hey, you've got to raise all this money just to play the game. 100%. Now with DeepSeek, the door is open. And actually, the door had already been open for smaller companies that were, like a company Grok that does an inference processor. The door has been open, but I think it's open wider now. Yep. And you'll see more companies get more visibility. And I think with the new administration and the changes at the SEC, I think there's going to be an incentive and a push for more companies to go public. Because the reality is it's not a stock picker's market anymore because the number of public companies continues to decline.
Oh, 100% disagree with that in terms of it's not a stock picker's market. Absolutely, it's a stock picker's market. I think it's more of a stock picker's market than ever before, right? Like way more than it's ever been before. I think the ability for you to overperform the market in a down market on down days and overperform the market on the good days is immense. Like, look no different than the public account. The public account smashes the market when the market's down and smashes the market when the market's up. Like, that's a great example of seeing that in action, right? And it's not like I'm the only one out here doing this. Like, I see so many people in my private stock group continually outperforming the stock market when the stock market's down and way overperforming the stock market when the stock market's up. Like, the stock market could be up like 1% and then they're up like 3 or 4% in a day, right? So we definitely disagree on it being a stock picker's market. I think it's more of a stock picker's market than, honestly, probably in history.
When you watched the sell-off yesterday, as an investor, I don't know what you're, invested in today in terms of public market stocks. I think you've gone through gyrations over the last, 5 to 10 years of being heavily invested in the U.S. stock market and then perhaps not so much. I mean, how does that look today?
Well, I had gone to cash because I was concerned about tariffs. I was concerned about the uncertainty. how high can this market go? And so when yesterday hit, I certainly took a look and said, okay, is now the time to dive in, and is this just an aberration? And I just don't get that feel.
By the way, I would not this is no disrespect to Mark Cuban. I think he's a legendary, obviously billionaire, but I would not look at him for investment guidance, in my personal opinion. Like, I've never looked at Cuban and been like, oh, wow, he's making all these smart moves. Like, he's a man that did extremely well during the tech bubble in terms of he built a company, he sold it for a ridiculous valuation and banked billions of dollars, and then obviously he bought the Mavericks, the Dallas Mavericks basketball team, and it's done well there as, basketball valuations went up over the years. But just understand, like, I would not look at Mark Cuban as like, wow, he's the most intelligent investor. Like, he's a Warren Buffett. He's a Peter Lynch. No. Okay, let's be very, very clear about that. He's just a guy that got insanely rich during the tech bubble, and he's, did well with the Mavericks.
Earlier, there aren't those up-and-coming public companies that you can say, look, this just opened the door for them. Let's jump on board with them. I think there's so much uncertainty still on DeepSeek. Is the information we got in terms of their cost to create the models accurate? I mean, it's still too early to tell.
What impact do you think it'll have on Sam Altman? I'm not sure how well you know him, how much you might know about Open, but the idea that now, he's talking about, wow, this is really an incredible model. It's going to force us maybe to be better and earlier in how they introduce some of their new features as well. I mean, it really feels like, Mark, this was a goalposts moving moment for AI and how we're all going to relate to it as investors. Do you feel that way too?
Well, it certainly has been perceived that way. I mean, I think it's still too early to tell. I try to geek out and learn more about mixture of experts and the way they're doing their models and all that stuff. So, I think it's still too early, but I think what really changes is it's not just a race to raise as much money as you can in order to be a player. And it also impacts regulation. Because before, when we talked about AI regulation, the presumption was all these companies, the Metas, the Googles, et cetera, OpenAI, they were so big they needed to be regulated because there really weren't up-and-comers that could disrupt them. Now, if all this plays out the way it appears to, the message is, bring on the 12-year-olds, bring on the disruptors who can come in here and change the AI game. There's an old saying, when you run with the elephants, there's the quick and the dead. And we finally found somebody quick who can run with the elephants. And now the question is, can the elephants run with the quick companies like DeepSeek? And I think you're going to see a lot more entries into the AI space. I think you'll see a lot of more private investment into small up-and-coming companies. I can't tell you how many conversations with private companies I've had, and now, it turns out I was wrong, where it was like, well, shoot, you're going to have to raise billions and billions of dollars just to compete with these guys. Mm-hmm. Now someone can walk in. I had a conversation with a company last week where we were talking about, the thing with TikTok is their algorithm, and they wanted to do algorithms as a service and build models so they can license what they think will be a better than TikTok algorithm to any social media company or other company that wants to use it. And the question was, how big a model and how much of an investment do we need to make? That all just changed. And so I think you'll see a lot more companies get funding that otherwise might not have gotten it because it won't take as much money to compete.
Interesting.
Great points by Mark Cuban. No, so I think Cuban brought up a lot of great points here, but let me be very clear about why I believe Mark Cuban's cash and why he wasn't buying yesterday. Let me be very clear about this. Mark Cuban is well known as a Democrat. He is well known to like those sorts of policies and things like that. And what do we know happens when a new president comes in who the other side might not agree with, right? A lot of times people get bearish on the market. And you heard him. He's worried about tariffs, worried about this and that, right? And this is what happens time and time again. You want to be a Republican? Go be a Republican. You want to be a Democrat? Go be a Democrat. You do you, boo. But you don't sell out of your portfolio and go cash because your guy or girl is not in office. No. People messed up selling stocks when Biden got in office. People messed up selling stocks when Trump first got elected in office, right? Like when Trump first got elected, the market tanked initially, right? Huge mistake. People that were selling stocks heavily in 2022, Biden was in office, big mistake. This happens time and time again. People will sell out of their portfolios because the guy or gal they wanted did not get elected, okay? Big mistake. Big mistake. After Obama got elected, market tanked. And if you weren't invested under Obama, you missed out on so much money, it's ridiculous. Happens time and time again. Don't let your politics and who you vote for dictate whether you're going to invest in the stock market or not. This is one of the main reasons that I stay apolitical. I don't say I want to go be a Republican, I'm going to go be Democrat. No. There's certain Republican policies I might like more, there's certain Democratic policies I might like more. But I'm not going to go make my investment decisions based upon whether a Democrat's in office or a Republican's in office. And I believe Mark Cuban, like many others, when their person's not in office, they get bearish. They think negative things about the economy and about the market and all those sorts of things. And it's just been proven statistically, factually, not opinion-based, factually, to be a monumental mistake to sell out of stocks because your person is not in office. I can give you the data based upon every single president, Republican or Democrat, over the past 50, 60, 70, 100 years. Look back as far as you want to. And the moral of the story is stay invested. Stay invested, okay? So, that's that. Let's get into Gene Munster here.
I suppose the best way to ask you whether you think this is an opportunity or sort of sign of a greater risk here is to simply ask you, are you picking up more NVIDIA at this point?
Deepwater does own NVIDIA. I can't say how we're trading it in the near term, but I can say we do own NVIDIA. And Deirdre, I think at the fundamental question there is the near term and then there is the long term. And I just want to highlight one dynamic around.
Let me put one last cherry on top for that last conversation we just had, okay? It is your job, regardless of who's in office, Republican or Democrat, to do what? It is your job to go make money. It is your job to go pick good investments that are going to do good regardless of if a Democrat's running the country or Republicans running the country. That's your job. That's how you got to look at it. I don't care. I don't care if Kamala got elected or Trump got elected. I'm going to go do me. I'm going to make a lot of money, and I'm going to get way more money. Whether Trump got elected or Kamala got elected. And I took the same approach when Biden got in office. And I took the same approach when Trump got in office the first time. And I took the same approach when Obama got in office. And whoever's the next guy after Trump or gal, I'm going to take the same approach. I don't care. I'm going to get richer. I'm going to get more wealthy, regardless of who's in office. I'm going to go make it happen. Not whoever's in office is going to make it happen. No. That's the approach you got to take, man. That's the approach a man takes in this world, right? You got to look out for you. You got to build your life. You got to build your family's life.
Term is that the innovation around DeepSeek is real. And even if you think that they're embellishing some of the cost piece around that innovation piece is real. But there's a much bigger question that needs to be asked is not about what the cost to train the previous models were, but to get to that incremental step forward closer to artificial general intelligence. Does DeepSeek...
Whenever I hear somebody say, if Kamala gets elected, the country, we're doomed. No. The country's not doomed. You're doomed. Oh, if Trump gets elected, we're all doomed. No. The country's not elected. The country's not doomed. You're doomed. The country's going to still run just fine. You say maybe this person will run it better. Fair. You could debate that all day. But the country won't be doomed. But if you have that approach, 100%, you will be doomed. If you are predicating your whole life based upon a man or a woman running for the presidency, and you think your outcome is dictated by that person, you're lost. You have lost. You took a real L there. That man or woman is not God. They put on their shoes one shoe at a time, just like you. They're not God. Trump's not God. Kamala's not God. These are just regular people out here. You say maybe one will run the country. Okay, that's fair. We could debate that. But to say the country's doomed because this person gets in and that person game, you're lost. You're doomed. You're doomed. If you got that mentality, you need to do some soul searching. You're in real trouble. I'm not talking about like, no, you're in real trouble if you got that mentality, man. Real trouble. Because you got what's called what? Victim mentality. Ooh, shit, that's bad. You got a victim mentality, you're in trouble in this world.
Some sort of a formula to do that in a cost-effective way. And my sense is that they will not be able to do that. So I think that the spending piece is on track. The reason why I mentioned there's the near term around how these are trading versus kind of, let's say, the near term over the next few days, actually, is that all eyes are centered on tomorrow night with Microsoft, with Meta, Tesla's comments about the hyperscalers. And most investors believe, consensus is that they're going to have some sort of reassuring comments that the market's going to be just, that the AI trade, the hardware trade, the CapEx spending is intact. And when that becomes consensus, if that doesn't yield kind of a rebound in some of these stocks, I think you could see a little bit of a near-term sell-off. If you're curious, typically when you have these shocks in the system, looking back to the run from 95 to 2000, it's about 30 days it takes from that initial shock that we saw yesterday to when things actually bottom, which puts us right in sync with when NVIDIA is going to be reporting their quarter.
Okay, so Gene, you can't say what Deepwater is doing right now with regards to NVIDIA. What about any of the other positions? And what should you do if you're a long-term investor here? Do you stay pat because we have earnings season coming and this throws into question some of the CapEx spending by hyperscalers? Or do you see this as an opportunity?
Well, I can say that we have made some adjustments, and specifically we continue to own some of these mega caps, but we're focused more on what we would call frontier tech, and this is more of these companies that are below $500 billion in market cap. These are companies that are also participating.
So that's not big tech. You're not picking up on big tech. You're actually broadening out.
Still holding it. Yep, we're shifting and owning some of these smaller companies. It's just as a point of diversification, but this concept of frontier tech has largely been on the side as mega caps have done so well over the past few years. But this, again, the focus here is this same innovation. If there's a belief in AI, I think these companies that are smaller, again, small, in quotes, 500 billion in market cap and lower, I think that's where you're going to start to see some of the performance. Still believe strongly in these companies. I think Apple's going to have a great quarter. I think they're going to beat the iPhone numbers come this week. And so I'm still optimistic around many of these names. But just in terms of where I think there's going to be a shift, how we're thinking about this shift is this focus more towards these sub $500 billion.
That was a vicious downtrend for Apple there. It has bounced back going in these earnings, right? But man, that was... That's a real mountain there, right? It basically just, went up, Santa Claus rally, and then just, it sold off completely everything. It sold off all the gains from the Santa Claus rally.
Nice.
The bulls continue to fend off criticisms of market concentration. We're seeing a lot of graphs tracking fragility events in this early part of the year. There's interest rate risk. Dalio's trying to say, are we in 98 or 99 at this point? I just wonder, is it starting to put chinks in the armor of what Mag 7's done for the markets?
I think that it's healthy to own some of these. I think it's also good just not to entirely own the Mag 7. So yes, I think that there are some chinks in the armor. I think there's these are examples of why it's good to have a diversified program. But I would also add to that, Carl, is that I continue to believe that we still have a couple of years where this market's going to continue to move higher. I think it will move higher. I think we're far from the top of this. I think it will end in a spectacular bursting of the bubble. I don't think that the bubble bursted yesterday. And so I think that it's a nuanced answer, Carl, but I think the Mag 7 is going to continue to do well on this. We'll hear some of that tomorrow night. So we're a believer in AI.
Believer in AI, yeah, no, you can be, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Additionally, if you're looking to apply to join a private stock group, there'll be pinned comment down there. We'll send you your cards in the mail, your Steel 1000X card in the mail, and additionally, we'll send you a private group card in the mail as well. That will be pinned comment down there to apply to join a private stock group and private wealth group. Much love and have a great day.